Welcome into Phil's Tax Hacks and Other Retirement Facts with CPA and personal financial specialist Phil Putney. Now let's get rolling with today's show. It's time for another edition of Phil's Tax Hacks and Other Retirement Facts. The year is winding down. I think we got about 2 weeks to go, Phil.
Yep.
And as we talked about on the prior show, we're going to discuss some predictions and some conversation about 2023, what it might look like from a market standpoint. So we're going to get into that this week. How you doing, buddy?
Doing good. Yeah, to your point, wrapping things up, getting all the planning pretty much done with clients now. So we're getting ready to coast into the last couple of weeks of the year. So
right.
It's always a good time.
I've got a few things here from the experts.
Yeah.
Talking heads or whatever. Maybe we're talking heads. I don't know. Maybe we're little talking heads. We're not big talking heads. But anyway, I want to give you some of this stuff, and then you and I can I've got a few other questions I want to ask you. We can just kind of banter back and forth what we think that could be on the horizon. And again, nobody knows.
Yeah.
Just like everything, there are indicators, and I think a lot of what we're seeing is that we're probably not out of the woods of this this tough run we've been having. But anyway, let's get into some of these things. So mergers and acquisitions says signs point to more market volatility in 2023. Well, there's a news flash.
Yeah.
I like how they can be super vague about it.
Like the weatherman,
Right. Yeah.
It's
You
going to
can
be
be
partly
wrong.
cloudy today.
Right. You can be wrong or right half the time, and it doesn't matter. But I think but it is fairly accurate. The signs are still there, right?
Right.
You're still having the inflation. It's not down where they wanted to. I think the Fed is still considering a smaller tick up. I think they had just announced the other day, last week,
Right.
I think they were going to do probably another raise hike, but it was going to be smaller than the prior ones. So those are still indicators, yeah?
Yeah, they are. But it was interesting on that point. I was just reading an article in the Wall Street Journal today that now there's, and again, I mean, there's speculation, but there's thought that the Fed might have to raise rates higher than what they were thinking, because the latest, the most recent inflation numbers have come out that they're going to have for the next rate hike. So that, they've got what they've got now. Okay. And the bad part about those numbers were, as you probably know, the jobs report, right? I mean, the job market is still strong, and that's not what they want.
Which is weird.
So,
it's
I mean, it's
job market strong, but we don't like that.
Yeah. Because it plays into inflation.
It plays into inflation. Yeah. It's such a weird formula too, right?
It is.
Morgan Stanley's Mike Wilson says the markets in 2023 will face extreme volatility and relates the market struggles to 40s style boom bust inflation cycles. That one's a little worrisome. Yeah,
I mean, there's a few out there that are like that are more worrisome than not. I mean, the market, to your point on all these, I mean, they're all
prognosticators.
There you go.
Big word.
Get the crystal ball out, right? What's it going to do? Well, none of us know.
Right.
I mean, there's indicators for sure, and I've said all along, I mean, the most recent rally that we had, it's great. This is not over. There's no way it's over yet.
Can't be.
There's too many things that haven't been righted yet. I mean, the inflation's maybe stopped running hard and hot, but it's still high, so that hasn't been fixed yet. And there's
energy is a huge component of this.
Energy is huge. I mean, there's just way too many factors that are leaning towards this is not over yet.
And how much is the conflict still playing into that? Probably a fairly decent amount, because Europe is still struggling. Europe is they're having a huge heating issue or energy issue, obviously, this year due to what's going on. And so it does kind of trickle out into the rest of the world too.
Right. And I mean, there's more and more companies all the time you're hearing that are laying off, I mean, so and to me, that's one of the bigger indicators. Look at the companies, look at what they're doing. They're preparing for a downturn, and they don't just they don't do this at a whim. I mean, they've got millions and millions of dollars on a budget they're trying to manage, and they're starting to prepare for this.
Yeah.
So
So that's some of the headlines. Now, let's you and I just kind of talk about it
Yeah.
from a more, localized or just a smaller scale, right? Because they're just kind of, again, talking super broad,
Yeah.
across the board. When we start to experience a lot of volatility, and we talked about this earlier in the year when it
Mhm.
first kicked off, do you get more worried calls from clients and potential clients? Potential clients would make sense because they don't have a plan, but do you get more worried calls from clients as well?
Um, from potential clients, yeah, as we're having that discussion, I mean, it definitely, you could see the worry there,
Yeah,
where's this going, especially earlier in the year,
sure.
as we didn't really see at that point, kind of what the bottom was. You didn't have this most recent rally up. So people
Right,
were worried of like, okay, how long is this going to
right.
go? What's going to happen? It's just we're halfway through the year and it's looking really bad. And since then it started to bounce back up and been a slight recovery, that bear market rally.
Right.
But I mean, recently again, we're starting to pick up that volatility and who knows, I mean, but yeah, so if you didn't have a plan in place and understand how this works, and have strategies to help hedge against volatility and how that affects your retirement, yeah, absolutely.
Mhm.
If your 401k strategy was the same, that you put in place back in, 20 years ago when you first, started, or 30 years ago when you first started, yeah, you're probably got some problems and
Or even 5 or
concerns.
7 years ago. I mean, yeah, right. Because
Yeah,
you put it in place in 19. That's a pretty darn good year too. So I mean,
yeah, and didn't make adjustments along the way. From the client standpoint, no, we
yeah,
haven't really received a lot of concern with it.
that's good.
It's been a discussion of, hey,
There's always going
should
to
I
be
be
somebody.
concerned? Yeah, I mean, it's never fun. It's never
Yeah,
easy to see, oh, market's going on. What's
yeah.
going on in the markets? I got
I
this
finally
downturn in the
opened my
market.
statement. Yeah, I finally opened my account. It's like, oh,
Yeah,
you got to get a few people that kind of don't look at it, don't look at it, don't look at it. Then they finally do, and then they go, oh, I got to call
yeah.
Phil. Let's just see if we need to do anything. And that actually brings me to my next question: how should we react if? So let's say you were sitting there for
Mhm.
half the year. You see all the stuff on the news. You're like, I'm not going to look. I'm
Yep.
not going to do it. I'm not going to panic. But then you open it, you see it, and you go, huh, you're right. And you feel, I think we feel this urge to do something to maybe stop the, it's almost like we cut ourselves. We feel this urge to stop. We got to stop the bleeding.
Right.
So we want to, how should we handle that? Should we, should we call our advisor or should we just react?
Well, and that's the real key to me. Key word in that phrase is how should we react? And the answer is you shouldn't
Okay.
react. I mean, that's when wrong decisions get made, emotional decisions get made. It's like, all right, I've had enough. Just get me out. I can't do
I
it
got to
anymore.
stop the bleeding, right? You got to think
There's
fast.
so many people that did that at the bottom of the pandemic. Oh, I don't know what, just get me out, and if you got back in early on, it was probably okay, but there's a lot of people that waited way too long to maybe get back in, and not just this time, but go back to even 2008, the last big correction we had. I mean,
Right.
the same thing, you wait too long to get out and then get in way too late. You're making emotional decisions. So yeah, you shouldn't react. Your action to this should be, yeah, talk to your advisor. If you've got a plan, you've got an advisor, talk to them. Don't let it build up in you and have sleepless nights and not worry, not know, oh, I don't know if, maybe I'm going to have to go back to work. No, talk to your advisor,
Yeah.
run through the plan. And we've had some of those discussions. It's concerned. It's completely normal.
Sure. Yeah.
It's not what we've been used to for the last 10 years, right? We've had this uptrend and it's been pretty comfortable. And, all of a sudden we're going through some hard times in a market, inflation, all these different factors. But yeah, talk to your advisor. That is one of our main roles, is developing the plan, making it work, but then being that sounding board to help walk you through this, to say, okay, yeah, I understand. Has anything really changed in your scenario? Okay, you need a little bit more because of inflation. Let's make some adjustments there.
Right.
But does that change your plan?
It
It
shouldn't
probably shouldn't.
Right.
Yeah.
Shouldn't be wholesale changes in that regard.
Right.
So the concept of volatility. All right.
Mhm.
In a portfolio, as we get into actually retirement, all right. So
Mhm.
we're right there at the door. We're knocking on retirement's door, or maybe we're already into it.
Right.
Do we need to avoid volatility altogether, or does it still have a place? I mean, you
Mhm.
have to have some, right, Phil? I mean, there's no way
Absolutely.
you can keep up with even normal inflation, I think, without having some.
Right. I mean, there's no investment vehicle out there that's going to give you enough growth to keep up with inflation without some volatility.
Right.
I mean, money in the bank, right? No volatility, but there has never been a time in history ever that bank products have kept up with inflation. That's not what they're designed for.
Sure.
They're designed for safety, security.
Right? But I'm in retirement. I'm panicking. So should I have some volatility? I would say the answer still has to be yes.
Absolutely
right?
Yes. Yeah. So you get into retirement, you need volatility. You need risk in a portfolio. The whole key to risk in retirement, though, is how is it positioned?
Okay.
And that's a hard concept often to get comfortable with, because it's a change, right? And we talked many times, the strategies that got you to retirement are not going to work in retirement,
right?
Because you no longer have time on your side. So you have this longer period of time, but you're now spending the money from that. So you can't look at, here's my entire 401k or retirement savings as one. You have to segment it up. At least that's how we do it. And whatever your process or strategy is, you have to be able to have volatility in a plan to give you, long-term growth for inflation. But it just has to be positioned in a way that it's not going to hurt you today.
And to me, that's the real mental gymnastics, because we see a downturn in 22 and then possibly 23. And the immediate mental gymnastics is that we have to remind ourselves that this is later money, and we have to have some risk for growth in the later money. And you think, well, later, I'm already retired. How much later? But you're still going to have later life, right?
Yeah, hopefully. I mean, hopefully you have 20 to 30 years or more. Yeah.
That's the mental trick within our own brain sometimes, because we want to make a move because it's down right now. And yes, you're seeing your money go down, but it's hopefully if you leave it alone or can ride the plan or work the plan, as we were talking about, then that, we'll see that growth come back through the retirement years. Now, granted, if you're 75 or 80, that might be a different conversation.
Well, right. I mean, your soon and later bucket are starting to merge,
shorter,
so to speak.
Yeah. So it's all about time horizon and strategy for.
Absolutely. Yeah. You can't. There's no one size fits all. It's not, hey, I'm in retirement now. Everything's got to be conservative, right? I got to go to that, 2020 fund or whatever it is, something really conservative because I'm at retirement. I can't take the risk. Well, yeah, you need risk long term, because the risk you're taking there is inflation, which is, again, we've all become very aware of what that looks like again. Again, just like the market, we've got very comfortable over the last 10 to 12 years with inflation. It's, 2%, 3% a year, maybe. I can handle that. That's not bad. Not 8, 9, 10. I mean, what's the real number,
Right. Yeah.
So
depending on the product, much higher.
Yeah. So, I mean, it's you have to have both in your portfolio as you get to retirement or in retirement. It's just have the safe money, so you're not going to have to worry about where the next paycheck's coming from, so to speak. That shouldn't be a worry. If you do, then things aren't positioned the right way.
Right.
But yet you still have to have growth for long term, and just understand that's going to have some volatility. That's part of investing. Yeah. Nothing new. That works somewhat similar maybe to when you were saving for retirement, because now you've got time with that money. And that's the whole key, is time.
Yeah. Well, what's the advice then? For reading these articles and seeing the news and having some sleepless nights and all that kind of stuff. What's the advice?
I mean, it's hard. You don't want to put your head in the sand and just ignore it, because it's happening, right? Sure. But be careful where you get the news and realize
advice. Click, turn. Once in a while.
Right. Realize what news is for. I mean, it's to make you aware of what's going on, but it's not, to me at least, it's not news like it used to be back when we were a kid of,
here's the information.
It's very sensationalized. It's all about advertising today. It's what it comes down to. At the end of the day, it's all it is they're trying to sell whatever it is to get advertising dollars. That's what drives the system. So just understand that, take everything with a grain of salt, and don't make emotional decisions. Have a plan, So that would be my main advice with this. Yeah, don't bury your head in the sand. Okay. If you haven't done something, it's going to dramatically affect you, but don't just start making wholesale changes without understanding what the options are. you can't change where you're at today. If you haven't made any changes and you've ridden this whole thing down and you're in retirement, now you're panicking.
Right.
Now isn't the time to just sell it all and go to cash and I'm done with this market thing and going to put it in CDs, because that might, maybe if you've got enough, that's okay.
Have a review, have a conversation.
Have a review.
Right?
Yeah.
Yeah, just have a review if nothing else. It doesn't, if you feel the need, and like I said before, the mental gymnastics are, we feel like we have to immediately stop the bleeding. We have to kind of, remind ourselves of the different things. And that's what an advisor can hopefully, or should be doing for you. Do yourself and your retirement a favor, just talk about whatever's going on, because we're probably going to still see a rough year, and we don't necessarily want to just wholesale make changes without getting a review and looking at what some of the best moves to possibly make, given the time, given the information, given all that kind of stuff. So how do you do that? You reach out to somebody like Phil and you just say, hey, I need some help, and they'll be happy to get you on the calendar. I know it's the end of the year, but you could still do that and get on the calendar in January or even February. So just reach out, take the action if you need some help, whether if it's not Phil, somebody, get yourself some help. But you can find Phil online at philstaxhacks.com. That's philstaxhacks.com. Don't forget to subscribe to the podcast on whatever platform you like to use. And you can find all of that good information, Apple, Google, Spotify, all that stuff. So, all right, we'll catch you next time here on Phil's Tax Hacks and other retirement facts.
Investment advisory services offered through AFS Wealth Management. The content of this program is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. Investments and/or investment strategies involve risk, including the possible loss of principal. There is no assurance that any investment strategy will achieve its objectives.